Hey, today is Monday, December the 30th, and tomorrow is the last day of the trading year. It's a half a day. I think that anybody who planned on selling to take profits or to claim some losses did so today, although the volume was fairly low in the Dow. Look at the NASDAQ. It was low in the S&P 500. NASDAQ was probably due to Apple, maybe also Tesla. But I don't follow Tesla, so I can't say. But decliners led advancers by 2-1. And that is what we expected for a couple of reasons. Number one is we saw the market breadth on Friday turn down towards neutral, and we expected it to continue to make that turn towards neutral. And I wouldn't be surprised going in January if we go down into the oversold area. So keep an eye on that. Another thing that told us that that was going to happen is the S&P 500. I'm going to pull up the SMIs. And these are the SMIs that we looked at on Friday, where we saw that the short term was starting to come down and the slower moving was also starting to come down. Now, the slower moving could plateau out while the fast moving is going down, or they could both come down. But the thing is, the slower moving is coming down. It's going to continue to come down. So I want to show you a couple of Fibonacci's now. Let me just clear out the Fibonacci's and go into something basic. Two Fibonacci's. One is this extension, which goes from basically the beginning of the year, December 27th, 19, when we bottomed after this long drop, and then we'd had this big wave up, and then we had a pullback. Now, I didn't do a Fibonacci on that pullback, and let's do that now. I'm not going to keep it, but let's just take a look at it. Look at that. We came to a 32.8% pullback, which is a valid place to bounce. And that means that you can take that wave and think that this bounce off the 38.2 is going to give us another copy of that wave. And did it? Did it? Well, it got up to 50% and then it pulled back down. This is an odd number, but it is a Fibonacci, 14.6%. But see, it perfectly coincides with this Fibonacci, which is a 68.1% pullback of the down wave. That was the one we would have been watching. You know, how much of this down wave are we going to retrace if we get rejected at this 50%? And we got the 68.1%. So again, Fibonacci's are working. We saw that bounce, and now we should be thinking that we can replicate this up wave. And we have reached 78.6%. It means that we're going to 3336. And that's a number that some analysts are calling for next year. They're calling for 3350, 3500. So it doesn't mean that we're going to get there next, but it means that we're going there. And we could be coming back and looking at this 61.8% as a place for support before we begin that pull up. So again, I think the S&P 500 is going down, and I think that it's possibly going to try to catch a bounce off the 68.1. And that's what I'm going to put on the chart so we take a look at it. Apple started the day off with the rest of the S&P down, but it recovered. And look at the volume above its 20-day moving average volume. So that's the institution stepping in. Now people say, who's left to buy Apple? Everybody that bought Apple already owns Apple. Well, that's not necessarily true. Index funds, not the S&P, not the Dow index funds, but mutual fund index funds, other mutual funds are going to do some rebalancing. And they might take out some Apple because it's just been so profitable this year. They might take some out, and they might be buying in other mutual funds. Apple used to be called a value stock. Now it's called a growth stock. So the mutual funds that are value oriented have sold Apple, and the mutual funds that are growth oriented have bought Apple. So there's a shift going on there. I believe Apple is going to, if it keeps support here of this 161.8, I believe that it's going to, this next Fibonacci at 304.16. Now, how long is that going to take? Will there be a pullback in the meantime? There might be, very well. I bought one vertical call of February 290 and 300s, and I paid $4.20 for it, $4.25, I think. Let me just take a quick look. I paid $4.64 for it, but my profit is $5.36. If it hits 125, 122, sorry, if it hits, let's say the 295, roughly, if it hits 295 and ends up there at the end of February expiration, then I'll have made double the money that I stood to risk to loss. And that's just the first one. If we see a bounce tomorrow, I'm buying 2 or 3 or 4 more of that vertical spread. Caterpillar had a pullback, so it's still staying in this channel. That's no surprise. The volume was pathetically low. Home Depot, that is a disappointment. Home Depot dropped by 1.3%. That's more than the market. That's a bit disappointing, but again, low volume. I'm still not concerned, although it now really has a lot of work to do to fulfill my prediction that it was going to go up and break through this thin part of the cloud. You know, it might take a little bit longer. It might happen here. It might not happen at all, but I am still holding half of my long verticals. AT&T had a bit of a pullback, got support on the 8 EMA. Look at the the fast-moving SMI is coming down, so the stock is coming with it. But the long term is still going up. The 200 is turning up. The 50 is up. So AT&T is still going upwards. Look for it to try to challenge this previous high of 39.62. I'm not adding any more, but I do have 1,500 shares. It goes ex-dividend on January the 9th. That's going to be next week. So let's keep an eye on that. WDC down 13 cents. Whirlpool chugging along, churning along. The short term, the slow moving SMI is moving up, remember? Now the fast moving SMI is starting to turn. Let's keep an eye on that tomorrow, but I wouldn't make any trades tomorrow. Let's just put a flag right there. And if we continue to get a move up there, then Whirlpool is going to be a buy. And you're going to find me doing more call verticals with limited risk next year than I did this year, where I had more stock. And then I switched in November to doing just call spreads and defining my risk and holding on to the cash that I had, which was a pretty good year. Shop down 12, caught support on this is the 200 moving average. It caught support on this red line here. Oh, sorry, the red line. That's our SMI, which is up at its top. But look at the slow, fast moving. The short-term SMI turned up, now it turned down a little bit. So let's keep an eye on that. I still don't have a position in Shop. I don't think Andy ever took a position. I don't know if anybody else did, but it's an interesting stock to follow. I think I'll read and see what they do and learn a little bit more about their financials, because it's in a real neat situation here where you have a double top, and those are always interesting. It's certainly a place where a major decision is going to be made. It's either going to be a major pullback or it's going to be a break. Now, because the 40 SMI, I'm going to start calling them the 40 SMI and the 12 SMI, because the 40 SMI is at its top, I think what's likely is that we're going to have a pullback. And this 12 SMI has got a ways to go to come down before, and then it'll jig-jag up and down. But overall, this looks like we've got downwards motion for Shopify. That's what I would think. Amazon had a horrible day today, down $24, down 1.3%, worse than the overall market, but again on low volume. So I'm still thinking tomorrow being a half a day trading day. I think it closes at 1 o'clock. I don't think much is going to happen tomorrow, but I think we're likely to see some selling on Thursday and Friday, and next week should be challenging.